Good morning, everyone, and welcome to the European crossover webinar. And we didn't see the bigger movement that I would have thought with it might have seen, during the minutes, but we did see some sporadic jumps around, and a little bit later on into the session, just going into before we got into Asia, started a couple of people because I got short again in the euro, and they're asking what we're looking for. And I was looking for down here at 1323, so that ended up coming down here. We did make it down here to 1321. So but we've since popped back up, and we did some analysis. To me, I believe, and we take a look quickly at the euro, and we do have some data that's come in also, so let's go and get to that. On the French PMI market, came in at 51.4, which was a bit of a surprise, to the upside, because I was thinking they would maybe come in a little bit lower. And also in the German services, that came in a bit stronger. So we made a popper up here in the euro, but getting back to what I was referring to, and we'll take a little bit further here. Eurozone PMI flash down 1.1. And a little bit later on today, of course, we have jobless claims, existing home sales, market services flash, PMI. Getting back to the euro, I think we have some unfinished business that we got to get up here to this 1380, and I think we'll still make it to, I believe, this was our bias chart resistance yesterday, going into those minutes, which is a 1389. I think that we've gotten to that point here where on the daily we'd referred to about the market getting evening up itself a bit. With the disparity that we saw here in the exponential moving average. Well, I'm going to say we've evened it up by any stretch, but we've come in a bit. But that being said, I think we've got some unfinished business to do here up into that 1389 area here, and I think that's where it's going to go and eventually take us. Just as the dollar, I thought we could still push a little. We did make that push a little bit higher here in the dollar. You can see that here when we took that dip towards that 1321. We're looking for 1323 in the euro. Once again, it's very, very tight ranges here with the euro, and we'll just quickly go on and move on to the morning bid and some news, and then we'll go on and move into the analysis. So it says the morning bid, signs of Brexit movement of sorts. This is barely perceptible sense of movement coming out of the British PMA's dash to Brussels last night, which yielded a joint statement with the EU speaking of the need for appropriate legal assurance for both sides. The media focus now will be on the persuading UK Attorney General Geoffrey Cox, who will be in Brussels today, that any such assurance would mean Britain will not be locked into permanent alignment with the EU due to the Irish backstop. That May hopes would in turn allow him to change his legal advice to Parliament accordingly, and thus persuade enough lawmakers to back her deal after all. All that said, it still does not look as though May will be ready to call a fresh vote on before next Thursday, when parliamentarians have promised to make a new attempt of excluding the outcome of a no Brexit deal. That will depend partly on whether May's ministers are ready this time to defy her and back such an effort. Reports this morning suggest up to 15 of them will put their jobs on the line over it. Also, the ECB publishes the account of its January 23rd, 24th meeting, which it left rates and guidance unchanged. Draghi already stressed downside risks to the region's economy from a host of factors. One of the big themes is whether the central bank will push ahead with a new round of multi-year loans to banks, known as targeted long-term refinance operations. valuations, also referred to as TLTRO. That option, Draghi confirmed, was raised by several policymakers at the January meeting, but no decision has been taken. Markets retained much of their recent gains overnight, with the two big influence of the trade talks and the central bank settings all supporting factors. A formal U.S.-China trade talks get underway later today in Washington. The signals remain positive, and Reuters reported overnight details of the memorandums of understanding. Both sides are prepared to sign up even if the formal March 1st deadline is pushed back. However, the big gaps apparently remain on the U.S. administration's demand for structural movements from Beijing on intellectual property protection. The minutes of the Federal Reserve's policy meeting offered little new to the market, but confirmed the dovish tilt towards being patient on further interest rate hikes. The European Central Bank minutes are due out later on Thursday and will likely chime with an overall dovish message. The dollar was firmer. However, the dollar index ended up 0.13%, and euro dollar a shade lower ahead of the ECB minutes and critical business surveys for February due out later, underscoring the ongoing weakness in the world economy this year. However, Japanese manufacturing activity shrank this month for the first time in 2.5 years, according to PMI businesses surveys, and Europe and U.S. stock futures were markedly slightly higher first thing. President Trump said overnight the U.S. would impose those tariffs on European car imports if it cannot reach a trade deal with European Union, even though the markets could weigh on autos, especially German car makers Daimler, BMW, and Volkswagen, which are highly exposed to the U.S. The threat is not new, and a recent bounce in auto stocks indicates investors remain hopeful. And a reference to the emerging markets, dubbed as most crowded trade, remains upbeat, and UK sterling was a shade firmer, although there was little from PM May's meeting with the European Commissioner Chief Juncker last Wednesday. UK Minister Hammond continued to talk up the prospects of changes that could get the Brexit withdrawal deal through Parliament in a meaningful vote as soon as next week. On the flip side, credit rating firm Fitch lost patience and put UK sovereign debt on a formal downgrade, warning the Wednesday in a heavy day for European earnings. Barclays reported a lower than forecast attributable profit for 2018. On to the Canadian dollar. We did see this continue to remain strong. It says the Canadian dollar strengthened against its U.S. counterpart on Wednesday to its highest in 2 weeks. As oil goes, so does Canada, said Michael Goshko, corporate risk manager at Western Union. The dollar gained against the yen and cut losses versus the euro on Wednesday. The gains for the Inkaluni came as Canada's oil-producing province of Alberta said it had at least 4,400 rail cars in a multi-billion-dollar deal move to clear a glut of crude that depressed prices. So that certainly provides some strength right there. And the Australian dollar slides on China's ban of coal imports. The Australian dollar tumbled on Thursday on fears a ban on the country's coal by a Chinese port would hurt its already slowing economy. The Aussie skidded almost 1% to 70.86 on news China's Northern Dalian port has put an indefinite ban on coal imports from Australia since the start of February. The ban comes amid simmering tensions between Beijing and Canberra over issues such as cybersecurity and China's influence in Pacific Island nations. Australia recently revoked the visa of a prominent Chinese businessman, further straining ties. The Aussie was already on the back foot after a major Australian bank forecast further policy easing despite strong jobs data earlier in the day. We saw that run up above 72 and fail. 72 was a key marker, remember, on the way up when we were talking about if we got a Chinese deal. So they quickly sided off from that 72. Initially jumped almost half a cent to 72.07 on Thursday's labor report before falling back to 71.55 after Westpac predicted interest rates would be cut both in August and November. The call on rates is boldly timed given the data showed jobs climbed 39,100 in January, more than twice the market forecast, while the full-time employment surged 65,400. Arguably, full employment has been achieved, and at the risk is that employers will have to pay more to secure staff, said Craig James, economist at ComSec. It means the Reserve Bank stays on the interest rate sidelines for an extended period. The Reserve Bank of Australia has kept rates at 1.5% since mid-2016, but did concede this month risk for a move that are either side are now evenly balanced. RBA Governor Lowe has emphasized that only a significant and sustained rise in unemployment would provoke a cut. Well, we're not seeing that right now, but certainly the Aussie did want to back off. And just a quick thing on Hammond's sterling rose to the day's high after British Prime Minister Philip Hammond said on Thursday the possibility of no-deal Brexit is leading lawmakers to reconsider backing the Brexit deal. British lawmakers could be given a vote on a revisited Brexit deal as early as next week, as talks with the European Union have been constructive. And moving on, the euro holds 2-week highs before the survey data. We just got that. French and Germany Purchasing Manager Index data shortly by the Eurozone flash PMI. France did surprise a bit to the upside. A bunch of weak data this January has undermined the support of single currency. The economic situation in the Eurozone seems much more critical at present, Commerzbank strategist wrote in a daily note. Against this backdrop, PMIs are likely to be of particular interest. Citibank Economic Surprise Index shows the Eurozone indicator is still wallowing near a 6-month low hit last month. Elsewhere, the Aussie dollar tumbled after customs officials at China's North Dalian port banned the import of coal from major supplier Australia, just days after the central bank stepped back from its long-standing tightening policy bias. And lastly, Eurozone yields rise on French PMI surprise. Eurozone government bond yields rose 2 to 3 basis points against the board on Thursday as euro strengthened after a survey showed French business activity has surprisingly firm in February. The euro edged up 0.5% to the day's high of 13.64, and Germany's 10-year bond yield, the benchmark for the block, hit a 1-week high of 0.12%. So we can go on and move on into the analysis. Seeing this euro dip right afterwards here. So a little bit of mixed bag. As I said yesterday, we were looking for the euro going and take this dip, down to 13.23. We had a pretty nice little rebound. As I mentioned, I still think there's some unfinished work here, but you can almost say the same thing for the cash dollar index. But although it came fairly close, we'll start with the euro. The euro has unfinished work at 13.80. Well, we certainly made a run up here, but we still came up short. Support comes in at 13.13, with the resistance remains at 13.89. That's when the area that we were talking about. We'll move back into the euro. So we're locked into a fairly tight range, so we may not see a whole lot of big changes here in the analysis. You can see here we're just keeping our stuff in place right here. I thought we may be able to push up a little bit higher yesterday, and why I say that there's still some unfinished business. So when we look here on the 2-hour chart, this is the unfinished business I'm talking about, which is that bias pivot of 1380 right here. And coming up here, this is where we had our resistance yesterday, 1389, right? They're coming across. Well, I think there's still some unfinished business now. We did get just above 1360. We didn't trip these highs here. We're already backing off a bit here. And we do have the ECB going to release their information, so that's probably going to weigh a little bit here on the euro. Although we're still trapped in a tight range, we're going to stay with this 1389. But on the downside, you can see right here. Right there, 13. I call it 1313. We'll call it 1312. Right here, I'm expecting this to still stay in a relatively tight range. I still think there's some unfinished business here, and then we'll see, do we eventually rotate lower? Although we've made a pretty good run here, and look like we might get up to this 1380 and then eventually look to roll over, but we're kind of stuck in a quagmire here. But we'll go with 1312. And cable's still holding up very well. We'll go on and move into the 2-hour chart. Cable is in the buy mode, although a bit stretched. Support comes in at 29.74 with an upside target of 31.37. And here's that upside target coming in right here. Potentially, I think we'll still make it there. Now, 31.23, and you know cable loves at 78%. And we came fairly close yesterday. I thought we might even, like I said, might have pushed up beyond here and then came back. But we're still making this move, and we're certainly in a buy mode. And to me, as I said, and that's just initially speaking, who knows, this thing will push much higher. We are getting some more, if you want to call it happier news or whatever, as far as the Brexit thoughts, whatever comes out every day, it seems to change from time to time, day to day. But certainly I think that there's the opportunity for us to move up here to 31.37. We'll mark that off. So I think there's still this opportunity for us to make it up here at this 31.37. We do have some resistance. I mean, that's not that far away if we do start to see this dollar pair back. And I think sterling the cable can make its move on its own. And I don't want to keep this too close because I think you could quickly jump here, and before you know it, you catch a bit of a bid and your tripping stops. We do have the 78% here at 31.23, but I think this market can make it up here to 31.20 at 37. That's going to be this target off of this move. So we'll go with 31.37. Now in the analysis, we had 29.74 as our support. Well, that's about good 100 pips away. We'll keep it a little bit tighter here since we've got a little bit of an upside bid here. And you can see coming across, we're going to go with 30.30. 30.30 for the downside support for right now. Certainly have a little bit of an upside bid. We can try and push this up higher. So we'll go with 30.30. Moving on to the Aussie, we did have this run up here, and I think we'll see it a little bit more clearly. And certainly, wow, what quite the dip here. We see it here, and we'll take a look at this on the Aussie. After we had that great employment data, boy, did we come lower. We triggered the 72. Remember, we've been talking about the 72 as the first area where, if we got some good news, some, folks will start to step in. Well, heck, they sure did. But I think those limits were already in place as we talked about, hey, that'll be the first area when we're, woefully down here and look like, well, if we do get that good news, 72 will be the first one that they mark off, and then right after that, probably like around 72, 75, I think I had mentioned, or 72, well, not 75, right before we got up there, like about 72.50. So these are already set in place, and we quickly lost that after that news. And not only did we lose it, we turned around and started going south of the border. Obviously, like I said, the good thing about covering this news is putting that stop on the imports of coal certainly has even given the Aussie dollar a little bit of a kick. Certainly, it just basically added, fuel to the fire, which was already pushing lower. At this point, resistance would come in. It's fairly clear. It would come in at there, 71.41. We call it 71.42. And we had 72.05. It just took this out by 2 pips. And let's take a look for support. Well, we've already come off quite a bit, and we came right back here. This is a huge level here, and actually the support would just come in about a pip below. We'll just call that 70.83. And the euro continues to weaken. Look at this, 13.27 now. Look at that. So let's see if we are able to make that move down here. May end up making that move down to that 13.12. Let's go and move back into the Canadian dollar. And this market certainly did strengthen. And thought, quite a few people thought that we were going to go in and end up, the Canadian dollar itself would end up losing face, to the dollar. And that has not been the case. I mean, certainly one of the things that's impacted has been crude oil, which has continued to go on and move higher here. Unbelievable. We just made another run up here like in crude oil. Now we had here's that upside target, that 57.18, but unbelievable here with crude oil. So it's obviously allowed this market to go on and strengthen here. Now we'll move into the 2-hour. Seeing the dollar index make this push up in here. This was our support here for the Canadian dollar here. We had 31.52, which is right where they went to. Well, 31.51, so off by 1 pip. And I like that support, so we're going to stay with that 31.52. On the upside, resistance is going to come in right there for, I should get a little bit of room just right there. 32.34. 32.34. And let's go and move on to the dollar peso. I thought we would go on and take this dip down here to 1911. I was looking to be about just underneath here. You can see here, right there. I thought we'd make it right down here to that 1908. I mean, certainly we'd already fallen quite a bit from this 161% that we had were looking at before in the level. And I never thought that. I just thought this area would just be a pause. Right there. Pull back maybe to about here, and then maybe start to move higher. I didn't think we'd come all the way back, so a bit surprised we came back this far, and now here we are motoring higher here in the peso. Let's see here. Upside resistance comes in at 19.29. Already had a pretty good run here. Yeah, we'll go with 19.29. This one has been tricky here. I mean, I thought this would have been was going to be a good buy if it did make it down here, and you just hang on. It's been a bit herky-jerky. No real, when I look on here in the 2-hour chart, I really don't see any real rhyme or reason here, other than it was oversold. But you can see here, we make this run up here, and we come up here only to kind of dip back. The only thing I can see right here is it held right there on this pullback, but it's just not a real good take on this market at all for the moment. Support is going to come in right there, 1917. What can you say about crude oil? I mean, this is amazing. I mean, technically, I really didn't even think I put it here as a level to get to, essentially a short-term target. But I really didn't think it was going to necessarily get there. But I mean, that was the target, technically speaking. And when I said let's transit, the only way to trade crude is on the technicals because it just does its own thing. Well, it says 57.18. I think if we did have that marked off yesterday, or no, we didn't. I'll mark it off for today, definitely. And this is supposed to be 1929. But we've made it up here to this 57.18. We actually just got just a hair above it. Actually, the high is 57.12 or 57.11.6. See that marked off. No, it did. It did get up there. Well, we have to 57.22. We have 57.18. That was yesterday. 57.18 is that target area. Support comes in right there at 56.13. This market's amazing how it's just continued to move higher. Right there, 56.13. And let's go and move into the dollar yen. Says the market's looking for an excuse to take out 111 on up to 1144. Two consecutive 2-hour closes below 1025 to lose the upside momentum and turn it into a seller's market. So let's go and take a look at with the dollar yen. We just keep hanging around here on this dollar yen. Here we are looking on the daily, but it's actually in the 2-hour. You can see things a little bit clearer. And here's that 1144 I'm referencing here. And I think they're just finding every little reason why they could get let's see here. There we go. We're holding here for night now, and that's what I'm saying is any little, if the dollar makes one more little upside round, we may be able to push this euro maybe down to that closer to 113 is going to allow this to try and make one more little push. Whether we can push higher, we'll go on and find out. But for right now, we're going to go with, we had marked 1103 as resistance. I think we're going to keep that here on this 1103. I believe we had that marked off. Yeah. Support, well, the key support, like I said, if we can get two-hour closes below that, that's going to turn this, then people will be running for the hills on this thing, looking for this to push lower. But we haven't done it so far. And if you look at it on a daily, 1134, we talked about that. I'm sorry, not 1134, but 1034 has been important here for the dollar yen. And we'll keep that as our support. So really no changes to a certain extent in the dollar yen, although it's just marking time as it really wants to find any kind of excuse to push higher. And let's take a look here on the Aussie yen. Well, we had 79.75 as our resistance. We did make it up here to 79.81, 81.5. So a pretty good little pullback from there. We're still in a buy mode here on the exponential moving averages. Oh, wait a minute. Oh, here we go. I ended up hitting 3 hour. There we go, the 30-minute. Actually, it's sell mode there, but trying to see, obviously, the Australian dollar data is really what shook this out. Maybe one more run up in here before we rotated lower. And a long-legged doji right here. So just maybe, well, as weak as the Australian data is, I'm not sure if we can get a whole lot. The resistance even seems a bit stretched. It would be 78.90, which isn't even that far away. We'll actually go right here with 78.99. 78.99 on the upside. For support, right here, 78.36. 78.36 on that support. Let's see if we have a fib confluence come in. Yeah, that would come in with the 61%. So it's going to be 78.34. And let's go and move into the cash dollar index. Says the dollar index held just above the bias chart support of 96.24 with a low of 96.29. 96.09 is the pivot that should be eventually visited, but one last gasp rally is possible to 96.79. Market remains in a sell mode via the exponential moving averages. So looking here with the cash dollar index. I think we can still make a move here, right there. And there's 79 coming in right there. There's still the possibility we can go there and make one more last run up in here. To me, when I look at the euro and the cash dollar index, to me it looks like, as I mentioned before, unfinished business on both sides. Neither side. I think we had the opportunity yesterday to stretch on both sides. The euro could have taken a run up here towards 13.89, then open the door for a rotation, a full rotation lower. We ended up pairing back, moved up a little bit higher. Well, this morning we made a little bit of run here. Now we're pulling, edging back maybe towards this 13.12 we have. The same thing with the cash dollar index. It feels like, once again, unfinished business. So I think we can still make it up here potentially to 96.79 before we come back down. So that's actually going to be our resistance for today, 96.79. Then we look at support. This is our bias chart support yesterday at 96.24. We made it down here, as I mentioned, down here at 96.29. Certainly we've got a little bit of an undertone bid. I don't see the dollar index turn around and coming apart at this time. So we're going to go with support for right now at 96.34. So they're trying to make this push up in here. After coming back like this, really opens the door for this. But it's still, if you look at it, let's take a look at it here on a 30-minute. Still the door open to come up here for starters before moving higher. But you can see this exponential moving average on the 30 minutes, a little bit all over the place, which isn't a surprise. But I think we have the opportunity to make it up to 96.79. With that, let's go move into the gold market. Well, it wouldn't be a gravestone doji, but it's a little bit worrisome here. I mean, from a market has been stretched quite a bit, and the dollar looks like it may want to make one more last push. So an ease back is probably within reason. We did really stretch this thing for all it was worth, and that's with the dollar holding its own relatively well. So if we make this one, as I mentioned, one last gas push with the dollar, and I don't think it's the last push. I'm just thinking that has that opportunity to move higher. Looking at the resistance at that 1341, we'll mark this off. And for support, we'll go into the 2-hour chart. We're looking at 1329. And then we'll put it right there, 1327. 1327 for support. Then we'll move into the buns. Yesterday we were looking for 66.54 and pretty much got in this area right there. We got up to what, 66.57. And boy, did we take a pretty good slap back down here. So any moves back up to this area right there, 66.38 will be, and that may even be a bit of a stretch, we'll call it. You can even make the case right there. We'll call it with that, 66.36, 66.36 on the upside. Downside support 65.95. This market could really come off a bit. As overdone as it is. Just for now, we'll go 65.95. We'll have to see if any patterns develop, but we are overstretched. Look at this DAX. Boy, this thing has really made a run up here with these equities continuing to push higher. And certainly the better than expected PMIs, although the German data wasn't all that great, is certainly going to help a little bit. This is a good volume level on here. Coming right across. And we'll say that's resistance, 11,451. Support for right now, this key area, which is 11,359. And you can see right now the cash dollar index making this move higher. Obviously, the euro subsequently lower. We've got our support here on the euro coming in at 13.12, and resistance on the cash dollar index to come in at 96.79. We're expecting a push. Starting trying to make this break here. And I'm going to get this posted out in the room. And thanks for joining us here on the European Crossover webinar.